All right, so the first time I've just recently found out about niobium.
Yeah.
There's a company on the domestic market, WA1,
Yeah.
and they've had a significant intercept in WA, and it's caused the market. It's caused market mania.
What is niobium? I've never heard of it.
I think it's a micro alloy, and from what I understand, it's a pretty scarce resource. So the competitive landscape in terms of niobium, there's a private company in Brazil that's responsible for 80% of the exports globally. There's a niobium deposit in Canada. I'm not too familiar with how big that is. I think it's called Nio Bay or something like that.
Yeah.
And recently WA1. Now with the addressable market, I think it can be used as a micro alloy for steel. So from what I gather, it's something that they can kind of use and mix with the steel, and it reduces the weight by 25%, right? So the use cases are going to be used for infrastructure. I think I heard someone say that 300 grams of niobium can reduce the weight of a car by 200 kilograms.
Really?
Yeah, so it seems like a super resource. Like, I'm still kind of learning a little bit more about it, but it's definitely the talk of the town, and it's something to kind of keep an eye on.
So, like with steel, you've got like the current alternatives are like aluminium, where it's more malleable and it's lighter weight, or you've got like, sort of carbon fiber. Is carbon fiber steel or no? It's different. I think it's different. but aluminium is a more malleable version of steel, right? Like more or less. Would you say like niobium is different to aluminium in like its traits or?
Yeah, I really don't know too much about it, but it's definitely in contention at the moment, especially with the domestic market.
Yeah.
WA1 since October is up like 3,000% or something like that. It's absolutely ridiculous because
tabs on.
It's so scarce, and it's a world-class resource that they've come across. We're waiting for more assay results to come out in the next couple of weeks, but it's definitely a company to watch.
Yeah.
However, I'm not the niobium expert, unfortunately, for the listeners, but I'll clue you in onto what to look for.
Yeah.
But yeah, in terms of niobium's addressable market, I mean, I'm sure, there's a lot out there. So,
and what are your thoughts on lithium and gold? What makes them interesting?
Gold, because it's a hedge against hyperinflation.
Yeah.
I think it's a really, really hot commodity. I mean, the price of gold isn't really that fantastic. However, with the economic climate, I think gold is going to have a renewed interest. People are going to be buying into gold ETFs and physical gold contracts. And I think that, some of these, because of that, I think there's going to be a lot more gold explorers come out over the next 2 years because of inflation.
Yeah, and it's not like inflation has been a hot topic or anything lately, right?
Yeah, it's pretty grim. Pretty grim.
Yeah.
Have you been keeping an eye on that yourself as well, like with the RBA changing their rates to combat inflation?
Yeah, definitely. I think gold is, historically it's been a fairly like uninteresting commodity, like up into the point, like at least up until recently.
Yeah.
When, like at the start of COVID, I think gold wasn't doing too much.
Yep.
And now that we're sort of in the latest cycles of the hyperinflation and all the quantitative easing and all that sort of stuff, we're starting to see gold reach, close to its all-time highs or it's at its all-time highs.
Yeah.
And yeah, I think it's definitely an interesting, commodity. It doesn't have a lot of use case other than store value, I suppose.
Yeah.
But it is definitely interesting to me. I think I'm probably more interested in like lithium. Like I'm only interested in gold if it makes me money.
Yeah.
But lithium, I can get behind the story and the renewable vehicles and sort of the implications for your average consumer. Like and potentially looking around and seeing half or if not all the new cars being manufactured being
absolutely huge addressable market, especially with the our efforts to reduce our carbon footprint.
Yeah.
And to reach our target, that was outlined in the Paris Agreement.
Yeah. So let's touch on like these speculative mining companies. So when you're doing your assessment, I know you've come across some new tools in evaluating the like firstly the different life cycle stages of the mining process,
Yep.
but then also how that relates to when it's a good time to invest in these stocks. So I think there's a certain model. Do you want to?
Yeah, look, I look at the Lassonde Curve. Okay, so when it's important when you started to invest into resource stocks,
Yeah.
that you understand the life cycle of the mine.
Yeah.
You know, in every different phase. I think a good way to look into that. So not only is it a good way to understand the life cycle of the mine because it breaks it down in terms of phases,
Yeah.
but it's directly correlated with the share price movement in these corresponding periods.
Yeah.
And that's called the Lassonde Curve. I think it's coined from Pierre Lassonde, who was a legendary gold trader.
Yeah. We like that.
And I've been using that, and it's kind of helped me break the phases down. It's helped me kind of process it from a fundamental standpoint. And yeah, it's something that I kind of want to familiarize myself with further. And I've found myself over the last couple of weeks going over metallurgy reports, preliminary economic assessments of the businesses.
Yeah.
And it's becoming very, very clear to me that this is a very, very dangerous game.
Yeah.
And it's no wonder why some of these resource stocks, or most of them, fail. It's
Yeah.
very, very hard to go from a concept and an explorer phase to production. It's very few and far in between, and it's becoming very, very clear.
So, like, would you say there's generally patterns in the stock price during different phases of the mining cycle? Like, do you tend to see price action follow like a certain trend during like different phases again and again, or is it kind of unique? Like, what do you think?
Yeah, so there are a couple of phases to look for. So the first one that happens earlier on in the Lassonde Curve is the discovery phase. So when they've started to drill and they're coming out with their RSA results, a lot of it causes a lot of market mania, especially if it's high grade and at a pretty good width.
Yeah.
And the speculators, cause the share price obviously to go up. As that resource is further defined, the speculators tend to leave, and then it kind of is directly followed by an orphan period. As you've got your preliminary economic assessment, your pre-feasibility studies, and your DFS. But yeah, so that's the first area. The drilling. Technically, obviously, you want to be in before that in the pre-discovery phase.
Yeah. So that's where you want to get involved.
Yeah. I think it's definitely worth looking at physical data.
Yeah.
The geology formations, and you want to look at the geochemistry data sets, because if you get good at that, you may have an early indication that you're sitting on a deposit, and you'll be in a better position to assess that likelihood. And I think it could be quite rewarding, and that's where I've just gotten into, and I'm really excited to see kind of how that plays out. The second phase, or the second massive move, according to the Lassonde Curve, happens when a company goes from operation into development.
Yeah.
And I think because of that, there's a re-rate due to the de-risking events over that life cycle. So it is pretty high risk, but once the economics are worked out, it's deemed to be economically viable. I think that re-rate happens after they've got the funding, and they can kind of go into operation.
Can we touch on that a bit more? So, like you've got the different phases for mining companies. You've got like concept, pre-discovery, the discovery, the feasibility, development, and then, sort of the actual operation and production, right?
Yep.
How do you know as an investor or as a speculator, early is too early and too late, you're sort of in when the crowd is already like, it's all been priced in, like how do you decide? I guess this model helps. But in your mind, can you sort of spell it out a little bit more in layman's terms, like why you feel the discovery phase is more advantageous versus say like the orphan phase or the other stages?
I think the discovery, speculators move in the market.
Yeah.
Right. And it's just, market psychology. I think a lot of people kind of get involved, especially if it's a good drilling. But the reality is, the life cycle of the mine and going from stage one to operation is a 10-year process. And I think that people, especially with the mining industry, seem to be kind of, have this mercenary approach where they like to trade companies, based on news catalysts. And I think that things really do dry up after that initial discovery, after they've drilled all the holes and they're going into the start of the feasibility studies. I think it becomes, less attractive
Right. And most people don't stay the course. Like they don't buy into a mining company while they're in the concept phase and hold for the 10 years, right?
Yeah, it doesn't seem that way. Yeah, I'm sure people do it, but it just doesn't seem like a common occurrence, because it seems that after that initial market mania, they will move on to another opportunity.
And I'm guilty of this. Like if a stock is sitting at like 50 million or 70 million market cap for 6 years, it's not going to get my attention.
Yeah, exactly. Look, I'm guilty of it as well, man. I definitely like to move my money where there's momentum.
Yeah. I think naturally people invest or speculate on mining companies after they've seen like some expansion, and that usually comes with initial results from the pre-feasibility or like during the discovery phase where they do initial drilling into an area and they find certain percentage of whatever from the metallurgy reports.
Yep.
And they speculate, but most people they don't understand, they're not equipped with how long the general cycle takes, and then they lose interest, or like you might even see the team change, right? Like they run through issues, they can't find funding, and then one guy steps out, and then, this super qualified person comes in, and people speculate on that, but there's still the challenges of like getting the right team, getting the right partners, getting a Chinese whale investor involved to fund the whole project to get it to production.
Yeah.
What are your thoughts on that?
Yeah, look, I think it's it seems because it's a really extended period of time to wait for your investment to mature. It's better to just time the market around those regions. But as I said, I think people, I think this is a really good model to use, the Lassonde Curve. To combat it. Maybe it's going to help you time your entries, and it's going to give you a better understanding of what to expect.
Yeah.
There's nothing wrong with holding it, but you don't want to be like me when I first got into some of the resource stocks. They were in the orphan period. I had no idea there was an orphan period.
Yeah.
So I was thinking, I can't wait for offtake agreements. I didn't really kind of look at, I didn't make some of the economic considerations that one would make.
Yeah.
And I think it's one of the hardest sectors to invest in, because of the amount of variables that you have to consider, the change in commodity prices and operating costs. It's very, very difficult, but it's very rewarding. It's a space that I think that if you spend enough time in it, you could really hone a lot of skills. I mean, for your financial modeling, mineral processing, everything. It really is a one-stop shop, but I think it's also the most difficult.
Yeah.
So
yeah, look, it sounds like it's a common pitfall to kind of start investing during the orphan period where like not much goes on, and you're just kind of sitting there like praying for the strategic partner to come in, and that sometimes happens, sometimes it doesn't, and then other sort of concerns come up. We were also talking about earlier about like the net asset value. And, how that sort of ties into, the discounted cash flow, and how like other ways you can evaluate some of the mining companies.
Yep.
How do they play into like assessing whether you're getting an investment at the right price?
Okay, so initially you got the preliminary economic assessment.
Yeah.
Okay, as that resource is further defined and you go into the DFS, you're going to see it's economically viable. You're going to look at your capacity. You're going to have a pretty good estimate of your future cash flows. Okay, and what analysts will do is they'll apply a discount rate in accordance with the risk. So obviously they add the risk-free rate, and they also add something called the equity risk premium.
Yeah.
And that's not a standardized figure. It's not a solid figure, and it's up for interpretation. As the mining company progresses through its lifespan, there are going to be de-risking events. Okay, so
what's an example of one?
So one is that from the process of going to an inferred resource, which is 100% hypothetical, essentially. Something's there, but you're not too sure if it's even economically viable yet. But as you move from the PEA to your DFS, it's moved from inferred, indicated, measured, and proven.
Yeah.
It gives you a lot more. So at that point, that becomes a bankable feasibility study, and you're going to know exactly what you need.
That's basically a plan to get the resource out of the ground to production, right? Like it's kind of the logistics, operations, the the partners that need to get involved, the government and all that sort of stuff.
Yeah, and during this phase as well, they're going to be optimizing their metallurgy flow sheet.
Yeah.
And it's going to give them a better idea how they're actually going to process material, some of the associated costs with that, which is going to actually help with the economics moving forward. In this point in time as well, they're going to have more sophisticated plans and more in-depth plan about actually how they're going to construct this mine and what's needed. So they're going to have a better idea as this progresses. And I think that they're all de-risking events. And I think that if they were able to get the funding and they move from the development side into the operation, there is a massive change in sentiment on the market. And that's where the second part of the Lassonde Curve really kicks in, because they've secured the funding, they've de-risked. That discount rate that had been applied previously to assess that risk is a substantial change, and any kind of change in the net asset value, it'll be trading at a different multiple, and then that's where that explosive growth comes from.
Yeah. So, once you, when you subtract the debt and you figure out the net asset value per share price, what do you do with that? Why is that important? So if you get an accurate, measurement of what you think a company's worth, what do you do with that?
The NPV, so the NAV value is generally dictated by the market.
Yeah.
And some of these companies are operating at a multiple, right? One thing that I found really interesting, and because I've been studying this for the last couple of weeks as well.
Yeah.
I listened to an interview with a guy called Kevin McLean, right? And he's his claim to fame as well. I mean, he's this chief investment officer of a royalty company in America at the moment. But it really kind of highlighted to me a few things. So he made a thesis called valuation kinetics, where he was looking at how these companies are forecasting and the particular price, and they're putting on a value to a company on a particular NAV multiple, and some of them are operating at a 2x multiple, 3x multiple, and he had a really big problem with that, because when he was applying his financial model and looking at the discount rate, he hypothetically would say, if I put this much money in...
An example was Barrick Gold, right?
Barrick Gold, yeah, absolutely. So, I mean, he used this example where it was like, if I was to buy a share at $20 a share price, okay, and I wanted to have a 5% return, he would turn this model into, so you're buying an annuity, right? But he figured that because... it worked out that annuity...
What's an annuity?
So you're getting paid per year.
Yeah.
Do you know what I mean? So it's like the interest that you're getting per year.
Yeah.
And how long it would take to recoup that money, right? So because Barrick Gold at the time had a mine life of 14 years, and he used this example, he had a problem because the analysts are allocating a price to this company at $20. And that annuity mathematically turned into a perpetuity. So that investment, he's not paying them to mine for 14 years, which they knew that was the reserve life or estimated the reserve life to be. He's essentially paying $20 for them to fund their mining operations forever. And that was the kind of the basis of his argument. And he thought that was quite unfair, and it was a little bit, didn't really like it. And it kind of, it's renewed my interest, it was just a new way of looking at it. It was a new term that I hadn't considered before. And, I encourage anyone to kind of listen to the Mining Stock Education podcast with Kevin McLean.
Yeah.
I think he's given me a lot to think about. So I hope to apply that.
With the mines, like you mentioned 14 years there, there'd be other factors in like how long a mine lasts for, like, for example... the exploration rate, or how quickly they get the resource out of the ground, and or how slowly or how quickly. How does that play into sort of the annuity versus the perpetuity?
I think it's pretty much dependent on what multiple they're putting onto it, and sometimes if they're putting on a higher multiple to their NAV value too early on, you're at risk of having that you can look at it from a perpetuity aspect.
Yeah.
Yeah.
It's-
No, I'm still learning about it, but it's definitely something to consider. I
Yeah.
definitely, would look further into it.
Speaking of other resources, what has there been any other useful tools or any other things that you've looked at when assessing like opportunities on the Australian domestic market around mining companies?
Yeah, absolutely. So because I'm not the best at financial modelling and applying the discount rate, these are new concepts to me. But I found myself earlier on in the Lassonde Curve in the pre-discovery phase. So when a mining company, before they get into the drilling results and the discovery phase, they're going to be conducting different sampling. And there's 3 different perspectives that they take. So they look at the geological formations, they look at the geochemistry data sets, and they look at the geophysical data. And, I've been looking at those processes and I've been learning a little bit of some tricks associated with it.
Yeah.
And more specifically, I've been trying to extract advantageous tricks that will help me assess the likelihood that a company will find a deposit and I can kind of get in before that initial surge in share price at the discovery phase.
Yeah.
So, for example, one of them was the geochemistry data sets and looking at, something called the super elements, and you divide it by the infra elements, and it's going to give you a coefficient. And essentially, if the higher the number is, the better it is, because it indicates that the potential deposit isn't at a phase, it hasn't really been eroded.
Yeah.
Whereas that, a lower number in that with that equation would indicate weathering of that deposit, and I think that is an associated risk to consider. So I'm finding little tricks. As I said, I'm quite new to this, or I've adopted a new kind of perspective and realized it. But there's a lot of information to kind of run through.
Yeah.
So surveying, tactics, processing, the type of drilling that they're doing. It's very, very important. But more importantly, equally important is to assess the credibility of the management team and whether they do have a good history of being good custodians of shareholder money.
Yeah.
Because before the resource is even defined, you're pretty much at the mercy of the management. So you kind of want to look at the capital structure. You want to look at, maybe early indications of how they're going to finance the operation itself. But you really do want to, have good management and a good board of directors.
Yeah. Yeah, for sure. Look, I guess to summarize what we've covered today, we've talked about your outlook on where you think these commodities are going and a bit of analysis around there. Some of the tools that you've used to assess, the mining opportunities, the Lassonde Curve and different modeling tools. Talked about net asset value. For a lot of investors who haven't dabbled in mining or maybe they have and they've been burnt, I think there's this stigma that there's a lot of speculation and risks associated with these companies. But on the other side of that, there's a lot of opportunity. What would you say to people who are reluctant to invest in mining companies? What do you think? Is what's your word of advice to them?
Okay, look at it from a risk model standpoint, right? Look at everything in terms of risk: operational risk, executional risk, financial risk, competitive risk. Keep in mind that most mining companies do fail and they don't get to the producing phase. I think that's important to consider, but also de-risk it over time. So if the market sees it as high risk early on, as it's getting through these feasibility studies, you can kind of de-risk it, because then after it does secure the funding, or if it secures the funding and it does get to that producing phase, it could be really, really profitable. But it's important to kind of to look at every consideration: environmental considerations, permitting rights, understanding a little bit more about the resource and its characteristics, the overall market. So keep an eye on obviously the spot price for that commodity, but also how they actually are raising money, what financing routes they've taken and what implications that may have to other institutional investors later on in the cycle. So one thing that, Kevin McLean spoke about was he didn't really like, the management to have too many warrants because it kind of acted like a magnet to the share price if it exceeded, that exercise price later on. I encourage everyone to kind of look a little bit deeper into it.
Yeah.
And also to provide me feedback, because it's something that I'm still learning as well. But I'm starting to get my head around it, and I'm started to pick out some pretty good stocks.
Well, thank you so much for taking the time to learn some of these new models. These concepts are, things that I had never heard of before.
Yep.
And I think we were talking about this earlier. The more you sort of look at some of the tools to evaluate things that are maybe a little bit more technical, a little bit more challenging to grasp the concepts, it's one extra tool that you can use that can give you an edge, because generally the harder it is to do something, the more valuable it is to invest your time to figure that thing out.
Yeah.
Because it gives you, as I said, the edge.
It's important to know, just like to conclude everything, each of these phases does have a lot of process. There's a lot of considerations in each phase. This is a high level view of it. However, when you do break it down, especially with the metallurgy flow sheet, there's a lot to uncover, and it's all commodity specific as well. So yeah, definitely look into it. You're gonna spend years getting good at this, and I expect I've got my work cut out for me. But it's very encouraging, and there are opportunities out there. As unlikely as they are, we're looking for winners.
Well, hopefully you guys learned something today. It was definitely a very technical topic, but I think Brendan did a really good job breaking down some of the concepts for us. There's just so much to cover in mining in this sector, so there's definitely going to be a follow-up conversation where we cover some of the other topics. Top of your head, is there like a couple other things that you're looking into that maybe you've thought about but just haven't covered on this podcast? Like, can you give us a preview into anything else that we might expect to hear later on, or is that a work in progress?
It's a work in progress, but one thing that I want to talk about is a podcast called Money of Mine that came out. Yep. I've been following them. I think it's an absolute awesome podcast to follow. I've been learning a lot about it, and I think the nickel landscape, the competitive landscape that's happening in WA, and the proposed PCAM plants is something to look into further.
Sounds good. Well, if you made it this far, thank you so much. We've really had a great time doing this podcast, and I'll work with Brendan to add some of these resources that we've covered on, like the Lassonde Curve, this podcast, and Kevin McLean. So,
yep.
Thanks heaps, guys.